This video is brought to you by Blue Guardian, the only prop firm that protects their traders. Folks, welcome to what is probably the world's first reveal of the Hong Kong Gap, which is a market phenomenon discovered by my guest, Gensler. He's an ICT free mentorship student who's taken things to the next level, and he's going to break it down for you in a second. Then we're going to dive into one of his live streams and see how you can actually apply it and take trades from it yourself. Now, Gensler is doing a Blue Guardian challenge with this Hong Kong Gap strategy that he's come up with, and you can see that he's actually doing pretty good over the last few weeks. Now, all these trades are being taken, or in fact, most of these trades are being taken on the live streams in the Asian session. I believe he's also trading the London session with it as well. So if you do want to see what he's actually doing in a lot more detail, then do go and check out his live streams, subscribe to the channel, make sure you don't miss them. But for now, we're going to dive in and find out how this thing works. Our sponsor, Blue Guardian, is the only prop firm that gives their traders a built-in tool to protect them from hitting their max daily loss and overtrading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know their evaluations are 40 and 80 days long, giving you plenty of time to hit their low 8 and 4% targets? Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
Let me explain the Hong Kong Gap. The Hong Kong Gap is something that I discovered through looking at the Hong Kong 50 chart. Now, what I noted and discovered was that from a certain time to a certain time, the Hong Kong traders, their whole session closes and then they open at a certain time. Now, those times are indicated on my chart here. We have 2:59. Of course, I'm using American New York time, but 2:59 New York time to 9:15 closing. So it's a closing of both of those candles. So as you can see over here, if I go to here, we have 2:59 right there. That is set. That's the closing of the Hong Kong session. And then we have the opening of the Hong Kong session, which is 9:16 or 9:15 closing, 9:16 opening. That is the Hong Kong Gap. And what you'll find is that price throughout the day tends to meander towards and away from that gap. So it comes to that gap, goes away, comes back to that gap, goes away, comes back to that gap, and it will continue. And it's very, very specific. It'll continue to come back to those every single day. Now, whatever trading strategy or system that you're using, this could be the thing that is your aha moment that just connects all the dots.
Yeah.
So then we have the next day, we have the Hong Kong Gap. Again, the closing and the opening of the session, price goes away from the Hong Kong Gap. That's why my trades go towards it. Then comes through it, away from it. And in London, it then initiates a trade to go back into the Hong Kong Gap. As you can see, it goes all the way through. And then throughout the rest of the day, it pulls back in to that time zone. And then yesterday, our successful trade, exact same thing. Price pulled away from the Hong Kong Gap, showed a market structure shift and went towards it. Ultimately, my goal was this little liquidity point over there and then continue to go through. Goes outside during London, comes back through it. During New York, comes back into it.
Wow.
So this is just something that I discovered in price from looking at I'll actually pull up the chart. It's the HK50. So if we go into where we are today, yeah, you can see very, very clearly how there's a gap over there in price. There's no price there at all. Now, the opening over here, the closing is at 2:59 and the opening of this candle is 9:16. Now, what happens is that is a gap that needs to be traded towards. So today, like I'm expecting very, very soon that price will start heading there. And then the same thing is repeated every single day. Here we go. If you look at the time down below, 2:59, and the opening of this candle is at 9:16. That is a gap, and price goes through that gap, away from the gap, and comes back and taps into that gap beautifully. Ultimately, it keeps on hitting that gap, and then we create a new one. So then we go back to and this is actually something that I observed while watching. It was actually, I don't know if you know, his name's Imperfect Trader. He was trading, and what he did was the opening of this candle, which is over here. As you can see with this gap over here, price came away, came back into the gap. Literally, my trade on the other charts is this. It's going to, I'm targeting the gap, and then whether it decides whatever it wants to do, go away from the gap, however. But it's very, very consistent.
So the imperfect trader what were they doing?
So he was actually, just because I like watching other traders and how they deal with stuff psychologically. And through his trading process, he was actually trading the Hong Kong 50, not the way that I observe it. What I noticed was that as he was scrolling through his charts, I was like, there seems to be a gap there. And so I went in and I scrolled through every single candle and made sure that there weren't any other gaps, because there is one more gap in the Hong Kong 50 that I utilize called the mid-morning gap, which presents every single day between 4:59 and 4:29 and 5:15 in the morning for the US. So if we come over here, you'll see over here. So we have 4:29, where 29 over here. The closing of that candle right there at 4:29, and the opening of this candle is 5:15. So there's an imbalance in price at that point exactly. And if you scroll sideways, you can see exactly what happens inside of that price range. It's fascinating.
Very clever stuff there, that Gensler. That's fantastic that you're being able to identify this. Look at the thing bounce off that line there.
It's exact, isn't it? Isn't that scary?
Yeah,
it's actually scary how the market is. So it just leads me to believe that ICT's concepts are even more valid every single time I discover something like this. Now, this is not necessarily something that ICT has ever spoken about. It's something that like I said, I discovered in price myself.
We'll call it the Gensler gap.
The Hong Kong gap as well is also good, but you can see here as well. So 4:29 and 5:15. If I just pull that to the sides, the closing and then the opening over there, you can see how price comes very, very close to that point, and from that reaction point, bang,
awesome.
Funny. Yeah. It's actually scary when you start noticing these certain things in price, and you can literally every single day you can put these gaps on your charts. Now, this is not something that I usually put on my chart. So 4:29 closing and opening. Now, what this is there's a separation when they go from real trading hours to electronic trading hours. So that's how you're able to use it. As you can see, there's a market structure shift, and what's it targeting? That little gap, and it hovers around that price. And then the next day, bang. Things like this, when you discover them, that's why I say, like, it might actually, your robot designing algorithms might actually be quite valid with using like these kind of concepts. So over here, same thing. We have the closing of this candle, we have the opening of this candle, and price goes away from it, creates a market structure shift, and then it comes straight back towards it.
Right, so that was the first part of the video. Now, what we're going to do is dive into one of the live stream sessions that he did, where he actually spent about 45 minutes breaking down the Hong Kong gap in a bit more detail, letting you know how you can trade it. So the quality of this one isn't quite as good, it's still all right, as the one you've just seen. But do remember, you can catch them live on these streams in the Asian session, or just catch the recordings of them if you do want to see a bit more detail around it. So let's dive in.
Now, for those of you US traders out there, okay, if you're ever getting confused, it's very, very simple. You know what I'm just going to do? I'm just going to do this. So I see no price, and I'm going to pull it back to where it locks me out. There we go. And I'm going to go back into price over here and make sure that we have our times. Now, I can't see a price before this, so I'm just going to wait for the next day. I can't see 4 o'clock. 4 o'clock is the open. Okay. Now, let's get into it on the next day. So we have here. We have right over here. Okay. 6:12. That was public holiday. So we don't trade that because it's a public holiday. Go to the next day. Okay, let's look at this and do it out. So again, you're going to use the same thing. 59 closing candle right there. Hong Kong gap is on all charts. Look how price respects that perfectly to the pip. Let's actually make it actually perfect. Okay, perfect, lovely. Perfect, lovely. Now we have 4 o'clock, which is the closing of the US session. So let's make that into 4 pips. That's the closing of the US session right there. Now we are looking at 9:15, which is should be over here. 9:15. Opening, so you don't, the closing of this and the opening of that. I use the opening of the 9:16 candle if it's not perfect. Okay, you can see how perfect price is throughout the day there. That is your liquidity. Every day, liquidity is the same. We have our gap over here, which the market opens at 9:30. Okay, opens down here. So this is our gap. Opens at 9:30 over here. 9:30 open. So you draw that out in price. Now what we have over here is this gap, closing, and the opening price will be seen to. Liquidity on the buy side, you'll see later on. It's funny. So what do we wait for? 9:50 and 10:10. It shows me indication wants to go higher. Then from there we had it didn't actually work out here, but we had 11 o'clock. You could have taken that trade on this fair value gap right there, put your stops at the low or lower depending what you want, but you know that price is going to go towards the gap, as you can see. Now I leave that on my chart because that's the Hong Kong gap. Now let's go further. We set a new day. 2:15, 2:59 over here. 59. Closing candle. Bang, right there. Now we have to do it to the pip. With indices, you have to be exact. Like perfect exact. It has to be, or always it has to be perfect, but we're exact over here. And we have 4 o'clock closing. Again, let's just take this, add it in to this point over here. 4 o'clock, bang, closing of 4 o'clock. Okay, right there. 4 o'clock closing. Done. You then drag that out through time and price. We then have the opening of 9:30. Which is over here. 30, open. Okay, this is now your gap. We've set our Hong Kong over there, and that is 9:15, which is over here. 16, there we go. This is our Hong Kong gap. Right? Now, as soon as 9:30 gets reached, we're looking for 10:10, not 9:50 and 10:10 for a price to break away, have a fair value gap, because it needs to fill in the gap, as you can see over here. The only fair value gap that was presented was this one right here, with the lows underneath there. What's target? Now price goes all the way through, all the way through, all the way through. Where does it react to exactly? Exactly. The highs of our Hong Kong gap. Like almost within, like it's like how much distance is that range there? From here to here? 26. Within not even 1 point. Yeah. Okay. Then we're setting our next day. So that would have been how much of a trade? A 3R. If you were able to refine this entry down even further, you could have put your stops underneath here, taken it after it broke down here, it went up again, broke this market structure, You have your fair value gap right there, bang. And then underneath the lows, and again, you're targeting the same price, which gives you a 6R. Depends on your risk tolerance, of course.
All right, folks, I'm here at Black Bull Markets headquarters in Auckland, New Zealand. You can see this amazing view behind me of Auckland Harbour. Now, talking about views, if you do want to get free TradingView Pro, then all you need to do is trade one lot a month at Black Bull Markets, and they're going to give you free TradingView Pro. So, folks, to find out more, click the link in the description below or the card above.
And it's consistent every single day. Now, this Hong Kong gap has been seen to. The one on the buy side has not been seen to yet. So that's a future point. You leave that on your chart. Okay, then we go. So I'm just going to delete that thing as it's been seen to. I'll just leave it in. We're setting the next day. So 2:59. It's the same thing every single day. Closing of that candle, bang, 2:59. The opening of 9:16, which will be the over here opening. Okay, that is now our Hong Kong gap set in stone. We have the closing of 4 o'clock. Where's 4 o'clock? It's up here somewhere. There we go. 4 o'clock closing candle is right there. Drag that out in price up until we reach 9:30. Okay, let's go down to where 9:30 is. $9.30 over here, opening price. So that's the beginning of that blue candle. We have a very large range over here that needs to be filled. And of course, we have our Hong Kong range that also needs to be filled. In price, within 9.50 over here and 10.10, there'll be an indication that price wants to move higher. Okay, so it does. It leaves us space and room to get into a trade that's going to go, obviously, towards try and fill the rest of this gap in, this huge gap that's over here. It needs to fill it in. If it doesn't do it on that day, you would have still made money because you would have taken partials and all that good stuff. You then set the next day and the next day and the next day. If we look at where price eventually turned around, where did we go to exactly? Let me pull it out to the 5-minute chart. That Hong Kong gap, perfect. This range over here, from this one over here, where was that? That was our 2.9, and here, this is another Hong Kong gap. So it came in, bounced, came down, went up again to fill that in. Where do you think price is going next? Could go there, or let's just set the previous days as well. So we have, again, same thing every single day. You just plot it out into the same thing. This is the 5 minutes. So here, 59, 259, closing of the candle. See how price is, it's stunning. It's absolutely beautiful. We go to 9.15 over here. 9.15, opening price. 16. There we go. The closing and the opening of 16. And we have 4 o'clock, which is all the way down here. 4 o'clock closing candle. Just this one. Let's pull that out. And we go to 9.30, just right here. 9.30 opening. As you can see, immediately at 9.30, price registered from this gap. But how do you know where it's going to? That's just how do you know? Because it's seeking the Hong Kong gap. which goes to fill that in perfectly to price. It then actually seeks the equal highs over here, snaps it. You wouldn't have entered because there's no market structure shift over here. The only market structure shift that happens is this one right here. Bang. Then what do we have? We have a fair value gap. You take your entry. From there, you have your highs and you target the gap. That gets filled perfect and price continues doing its thing. That's another 6R trade. Shocker. Then we do the same thing again, shall we? We're going to do the whole week. 59, 259 over here, closing candle. See how price has created this beautiful liquidity. I love seeing that. I love it. Why does it do that? Well, 259. That's when the Asian Hong Kong market closes. We then have 4 o'clock closing candle right there. That's your 4 o'clock. Let's drag that out in time and price. That closing, perfectly respected. We have 15, 16, which is very, very close. Ooh, that's delicious. And of course, price from there creates a beautiful, beautiful, beautiful little candle. Now, I see this, like, look at that perfection. That's just perfection. Every single pip on the dot, no, without fail. So let's just drag this forward in time. We then have our 9:30 opening price. It's a very tight range there. But what we have is we have the previous day's open, this gap over here, and we also have our Hong Kong, which is this one over here. No, it's this one. Now, because of that unfilled liquidity on the buy side, as I said, you wait for the next day. If it doesn't fill out that one, on the next day, you are expecting price to start seeking a certain form of liquidity. And so we have what happens at 9:30, price opens, comes in, fills the gap between 9:50 and 10:10. This A could have been a trade. So you have a fair value gap right over here. You could have taken that trade from there, had your highs over here, and just targeted either this or the bottom, but you're taking partials along the way, of course. Every 50% you take your partials. Or you could have traded the complete opposite direction. What happened? We had a market structure shift right there. We have a fair value gap that's right there. And you could have taken a long from the lows, because we know price is going to fill in the unfilled price for a nice decent 7R. I hope you're all getting what I'm saying over here. I hope this is so. My time is New York time, UTC. Yeah, you'll see at the bottom of the chart over here, UTC -4. It's New York time. These times are exact. Like, it's perfection. You can literally take any strategy you want. I don't care if it's moving averages. I don't care if it's a break of market structure, if it's a random just YOLO into the chart. Okay, from those certain times, right? We have this. We have a move over here. If I were to, let me actually, I don't have any indicators. Where's the indicators? Here we go. I don't ever use them. Let's go MA, moving average. So let's just put on like an exponential. Okay, and we'll put on 2 of them. Now I'm going to change the one to, like, I'm just creating a random thing here. This is going to be length 21. And this one is going to be, let's say, length 11. I don't know, 11. But if that's 11, I want to make this 22 for the lols. Okay, like I said, I don't care what strategy you use. If you're using ICT's one, which is this one, if you're using crossing, moving times, whatever it is, right over here, okay, you can see that that's crossed over. It fills in the fair value gap, but then it comes down. So if you're using that as your strategy entry or whatever it is, you can make money. If you're looking for, I'm waiting for confirmation on whatever it is, your confirmation is that price, if price gaps, whatever, I don't know, I'm just making this up as I go. As you can see here, price is gapping, okay, as in the two are moving away from each other. Then guess what? There's your entry, okay, within there, on the highs of that or whatever. If you take it on the line itself, you have whichever mental state that you want to be in. If you're whatever you're comfortable with, you then take your trade and it goes to where it needs to go. Like if you're waiting for pullbacks, you know that price is going to fill this gap over here. You know it is. So if you're waiting again for it to gap, if you're taking another entry, whatever, within that gap on that line with your stop over here, like it doesn't matter. It doesn't matter what strategy you're using. You just need to know where liquidity is and how to find price, literally. And it's not that hard, because in Asia it tells you where it wants to go. Yesterday, okay, we have my entry over there. I know because price did not fill this Hong Kong gap over here. Here's our Hong Kong gap from there, okay, to our 915, which is, where is our 915? 115 down here. Okay, that's our Hong Kong gap. I know that price is going to come fill this in. The highest probability time that I look for that is between 250 and 310 for a reversal. Again, let's pull this down to the 1 minute chart, and let's put these moving indicator averages thingies on that I never use, because I'm looking at price itself. I'm not looking at exponential to them. Okay. And again, let's make this whatever. I'm going to make this a random number, 50. And I'm going to make this next one, let's say 9. Okay. I know that price is going here. I know. You know, because that is your gap. What we're looking at is a specific time of the day between 250 over here and 310. Very, very common. What you'll get is you'll get price switching around to start aiming for the daily opening or the Hong Kong gap. I know that price is going to fill the Hong Kong gap. So now with our random thing, again, you can take it on the crossover. You can take it with as it comes and taps that line, whatever. You can take it from, if it breaches that line, okay, like, or however you're going to trade, you know that price is going up here. It doesn't matter. It doesn't matter how you trade. And it's consistent. Literally, just go find it on your charts yourself. Let me remove this nonsense because, like I said, I take price. Yesterday, on my personal, I'll show you on GBP. At that time, specifically, I know, where is it? 3 o'clock. Yeah. I know that price is going to start making its way up to here because there's a big pool of liquidity there that gets set in Asia. I know it. So what am I looking for? Between 250 over here and 310, it creates a gap. It creates a fair value gap over here. Okay, price rages higher. It then breaks here. It breaks the structure, comes back within that fair value gap. I took my trade, all right, in that fair value gap. And then from there, my lows were set underneath this blue candle because that's where I feel mentally comfortable to take my stop loss. And then as soon as that happens, price goes up. My target generally is 4R with partials at 50. Every day, every single day. These points of liquidity throughout the chart, you can see how perfect price comes down and takes them out perfect. This one over here was created, go back in price, go back in price, go back in price, on Tuesday last week. Okay, that was created. No, was it last week? Yes, it was. You can see how price comes down And then guess what? It comes and fills that in again. It goes up and then scrolls sideways. It comes in perfectly. Look at the pips. This over here. So it's not a perfect placement. So let me just, because it's not, if I don't see perfection, it means that I put it at the wrong place by a fraction. There. See, I know I'm off by a fraction. Okay, now let's go back to that same place in the chart. Right there. Now you can see how price respects that to perfection every single time. And then makes its way going down. Makes its way going down, 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 down. It comes back up to your Hong Kong gap, weekly opening, all that kind of stuff. Perfection in price. This little range over here, that tiny little gap over here that was created, okay, that tiny one there, that's perfection. Scroll that out in price. Why do you think that price created perfect liquidity here and from there moved down? Wow. Wow, wow, wow. Okay, like I said, literally just have these things on your charts and you can create whatever strategy you want, however you want to do it, whatever times you like trading in. Obviously, you're going to find the most probable times that you trade and how you trade.
So there you have it, folks. Interesting stuff, right? And do remember, you can grab those live streams over there on Trading Art, even the replays of the ones he's already done. And you can also follow his progress on the weekly recaps, where we've got the Blue Guardian updates on the folks that are doing the 100K and 25K challenges. So stay tuned for those things. All right, folks, do remember, whilst you're clicking around down there, hit subscribe, like, and that notifications bell, and we'll see you in the next one. Tired of missing trades or spending hours at the charts? Introducing my Robot Builders Club. With our platform, you can build bots in minutes, not weeks, without any coding required. Get lifetime access to my video course, VIP community, and over 40 ready-made robots. Works with MT4 or MT5, and as a bonus, you'll get 3 months access to my robot lab, where we build and test bots on live calls every week. Join the hundreds of traders who are trading smarter, not harder. Click the link in the description to learn more, get the free training, and download a free robot.